forward. Vinayak Chatterjee, good morning. Thank you for joining us. Now, let's be realistic here for a minute, Vinayak. A lot of good work was done by NDA 1. Are we likely to see an extension of that? Or new mandate, new government, new majority means that things would now be in fifth gear?
Look, I think the important point, there is going to be no let-up in public expenditure. So, however, the contrarian situation is that public expenditure is dependent on the fiscal headroom, and right now we are concerned about the availability of fiscal headroom to fund the kind of public expenditure which is required, and the BJP manifesto makes a fairly bold projection of 100 lakh crores, which is in 5 years, which is 20 lakh crores per annum, which I think in my estimation is 3 times what we have seen till now. So one of the strategies which I think the government is seriously looking at and is likely to implement with a lot of vigor is asset monetization of state-owned utilities, or what is also called asset recycling, so that funds from existing ongoing brownfield operating assets are unlocked, sold to largely foreign institutional investors, and that money provides a certain relief to the fiscal headroom for public expenditure. So that's one point that I'm looking forward to, is a huge step up in the quantum of sale of public, central government and state government assets to fund further public expenditure. The second thing is that there is no, should I continue? Hello? Okay. This issue is that there is no running away from the fact that this time the government has to bite the PPP bullet. You can't say that we are, we are really not that excited about PPP and we can actually get going with public expenditure and EPC contracts. The time has come when there is a really urgent need to revive PPP and the frameworks to attract domestic and global capital back at a very significant level into PPP. So I'm expecting that to happen quickly. Third, one of the biggest items which have been promised in the BJP manifesto is actually something this country really deserved decades ago, which is piped water supply to every household, which the BJP manifesto has classified as Nal Se Jal across India, every household. Now this comes on the top of the quite successful Saubhagya program, which is 100% rural electrification, for which the targets have been met with a lot of enthusiasm and with a lot of hard drive from PMO downwards. So water is going to be a big focus. So companies in the business of making pipes, valves, pumps, filters, and all this, and water treatment, chemicals, etc., I think should gear up for some very, very aggressive times ahead. And finally, there is a lot of enthusiasm in the last few days that I've spoken to foreign direct investors and foreign institutional investors. The sheer positivism of a stable government and strong leadership is leading to renewed interest in investing in long-term assets in Indian infrastructure. Now we must create the vehicles to attract those monies. InvITs, REITs, PPP frameworks, asset monetization, all of these need to move into high gear so that the goodwill that is there and the large amounts of funds that are hovering over India looking for long-term opportunities is actually harnessed into operating projects or release of capital from existing projects. But let me stop here.
So I'll pick up the very basic data, Vinayak, which time and again has been thrown at us. And this data is coming from Goldman Sachs to Niti Aayog to just about every major serious industrialist I have met who's got a skin in the game. And the data which we come back is private capex is yet to pick up. We do not want to invest right now because investing in India right now could be dangerous, as we are not sure of the return of our capital. Vinayak, why is that there is such a large discrepancy or such a large variation between what you are proposing versus where the activity is? I'm just simply asking a very basic question.
All I have to say is that I don't quite agree. This is the whole the Western Anglo-Saxon view of what's happening in the country, and as you saw the kind of reports from Washington Post, New York Times, Economist, if this was so, in a period of great uncertainty where people were not sure in what form, shape the NDA government would come back, if at all, a reserve price of 6,500 crores on TOT1 of national highways got Macquarie, Brookfield and others to bid at much higher than reserve price, and Macquarie walked away with the deal at 9,500 crores. If this was so 7-8 months ago, where the enthusiasm to bid for a clutch of operating NHAI roads far exceeded the government's own expectation, you think the situation has deteriorated now after all these positives have come into place? So I don't know what report you're referring to, how old they are, whether they're dated or whether they're current. But in my talks with a lot of FDIs and foreign institutional investors in the last few days, there is a renewed surge of enthusiasm, and they all say, if appropriate projects are put up for bidding, if there are appropriate PPP frameworks, we are standing by enthusiastically, because this is one big market where big dollops of capital could earn long-term return in a stable environment. So I suppose we have a contrarian view from what you're reading from the research analysts.
We're having this chat, Vinayak, because I want to dismiss this entire view which a lot of research houses have, who are just pointing out and amplifying the pain points. But we'll keep this debate for some other time. My next question to you, Vinayak, is that when India One came to power, we saw a huge resurgence and improvement in the way how road infrastructure was created. BOT was pushed aside, hybrid annuity was bought out. More than return on capital, safety of capital is something which India One promised to. So in terms of a big change from India 2 in the first 12 to 18 months, where do you think the focus or the thrust would be? Where do you think the entrepreneur will now feel happy, excited and even relieved in some extent to commit to capital?
See, the road story is well known. So, I mean, every analyst and his grandmother has written about the road story. So, let's take that as given. Let's move on to sectors which are going to see great interest. So, in India 1, which were the sectors which showed great interest? It was really roads and renewables, right? This time, I think you're going to see great excitement in water. Not just in the pipe water system, but also in irrigation and river linking. Secondly, you're going to see much more interest in railways and metro rail. The BJP manifesto again promises metro rail or equivalents in 50 cities. Railway electrification, railway expansion is a big ticket item, and railway capital budgets have almost caught up with the road capex outlays per annum. So I would certainly add water, rail and metro rail as the big drivers of growth over and above road in NDA 2.
Vinayak, morning. The clamour is only getting louder when it comes to an interest rate cut. On June 6th, you've got the next RBI meeting as well, and hopefully there should be a rate cut. But the fact of the matter is, for the last 2 rate cuts that we've had from the RBI, the transmission hasn't happened by lending organizations. Do you think that it's very critical, the rate cycle, for infrastructure as a sector?
No, I don't agree with you.
Okay.
I think we are that elastic to the infrastructure investment demand is not that elastic to minor changes in interest rates of a 0.5 here or a 0.25 there. The real issue is the risk that the capital faces over long-term projects. And infrastructure projects, money tends to get locked up from 10 to 60 years. So it is really the risk allocation framework, the feeling of confidence that of long-term yields that drive investment decisions, and not marginal changes across 6 months in interest rates. Because foreign institutional investors, honestly, their cost of capital is around 2%. You add another 5% to exchange rate hedging and you got a cost of capital of 7%. And they're happy to get a 2 or 3% return on that. So, if a project gives a long-term yield of around 9 to 10%, foreign money is happy. Indian capital, of course, requires returns of 16% upwards. But large chunks of money today are coming in from foreign institutional investors. So therefore, where is the question of interest rate being a driver of investment decisions in the infrastructure sector? It doesn't really matter so much.
Mr. Chatterjee, when it comes to the overall private capex as well picking up, do you think that the government will find ways to, take that development risk just like they did even with that hybrid annuity model, that this will also be a focal point?
Well, the government has learned that hybrid annuity model is a fairly safe and acceptable PPP framework. It has already used that model for the 74 odd effluent treatment plants for treatment of sewage along the Ganga, and people have seen closure there. So the hybrid annuity model is a very safe model, It gives you a 40% capex by the government upfront, gives you a grant, and then it actually insulates you from traffic or payment risks, etc., by the government giving you a check every 6 months. So, and it therefore draws private capital in. So, I personally think hybrid annuity by the NDA one was a brilliant stroke, and they should carry this format forward wherever it is relevant.
Okay. Thanks much for joining in, Mr. Chatterjee, and giving us a real in-depth view of what the situation is when it comes to the infrastructure sector. What is the need of the hour, what has been done, and what the sector is looking forward to with the new regime at the front.
Thank you.